Hi, everybody. This PowerPoint deck summarizes the key principles in budgetary accounting. Remember that we only record the budget in the funds. Primarily, we only record budgets in governmental funds. So in each case, when we make a budget-related accounting entry, we make no entries in the governmental activities. In this case, all of our examples will deal with the general fund. Example 1. Our city adopts the budget for its fiscal year at the start of its fiscal year, including the following estimated revenues, appropriations, and an estimated other financing source, leading to a planned change in fund balance, in this case, a reduction in fund balance of $250,000. So in this case, this means appropriations exceed estimated revenues and estimated financing sources by $250,000. So first, our city will record its adopted budget in its accounting system, recording estimated revenues and estimated other financing sources with debits, and appropriations with credits. And the balancing entry is to a fund balance account, usually budgetary fund balance. So in this case, we debit budgetary fund balance, indicating we are projecting a decrease in fund balance of $250,000 under this budget. Remember that the entries for estimated revenues and appropriations are sort of the opposite of what they are for the normal revenue and expenditure accounts. So our normal entry to a revenue account is a credit, but our entry for estimated revenues is a debit. Okay, during the year, facts change and it was necessary for the city to revise its budget. So it increased its estimated revenues from sales taxes by $500,000. It increased its appropriations for salaries and benefits by $600,000, and it decreased its other appropriations by $200,000. So we record the increase in estimated revenues from sales taxes by debiting sales taxes $500,000. We record the increase in appropriations for salaries and benefits by crediting appropriation salaries and benefits by $600,000. And we record the decrease in appropriations for other by debiting appropriations other $200,000. Again, our balancing entry is to budgetary fund balance. Then at the end of the year, the city closes out all of its budget accounts using the current balances in those accounts. So in this case, we are debiting the appropriations account and crediting the estimated revenues and estimated other financing sources account. The balancing entry is again to budgetary fund balance. Once the budget is closed out, the balance in the budgetary fund balance account and in all the estimated revenues and appropriations accounts should be zero. Example 2. This deals with encumbrances. Remember, encumbrances are a claim against appropriations, indicating that a commitment has been incurred in some way, but it does not yet qualify for recognition as an expenditure. So in this case, our city signs a contract for construction of a new fire station. No work has yet been performed. No invoices have yet been received. The estimated cost of the entire contract is $10 million. So our city wants to recognize that there is a commitment against its appropriations for this project of $10 million due to the signed contract. So it debits encumbrances, in this case for capital outlay, of $10 million, and the balancing entry is to an account called encumbrances outstanding. Several months later, the contractor completes the first phase of the project and sends the city an invoice for $3,100,000 for the work for that phase. At the time the contract was originally signed, that first phase of the project had been estimated to cost $3 million. So first we can record the expenditure because the work has been performed. We received an invoice, now qualifies an expenditure. So we debit expenditure, $3,000,001, recognize the account payable of $3,000,001 for the amount we owe the contractor. And in this case, we now reverse or undo the encumbrance entry we made related to the first phase of the project. Okay, and so In this case, remember, we always reverse or undo the encumbrance entry at the estimated amount, not at the actual amount incurred. We want to basically undo the encumbrance as we had originally done it. So in this case, we had originally estimated the first phase of the project would cost $3 million. We had recorded an encumbrance in that amount. It was part of the $10 million we did originally. So in this case, we reverse our original encumbrance entry in the amount of $3 million. We still have $7 million of encumbrances outstanding for this project, representing the later phases of the project which have not yet been completed. Now, in this case, we do make an entry in the governmental activities because construction work has happened, and we recognize this by debiting the capital asset account, construction work in progress, and accounts payable. Again, if you have any question about these examples, please post them in our weekly discussion.